Our income is a very important part of our life because it really determines our lifestyle. But not only does our income determine our lifestyle, it also determines what taxes we have to pay and what it's going to cost us to be on Medicare, and also affects our Social Security. And we get a lot of questions about income as it relates to these government programs. So in this video, I'm going to explain the Medicare income limits as well as Social Security. So let's look at these two government programs, Medicare and Social Security, and specifically as it relates to your income. So let's start with Medicare. I'm going to talk about Medicare taxes first. So right now, if you are working, 2.90% of every dollar we are making is going to fund Medicare. And so 1.45% is paid by you, comes out of your check. We call that FICA taxes or payroll taxes. And 1.45% is matched by the employer. So this is how Medicare is funded. Now, this is what everyone pays until you reach $200,000 in income, because anyone that makes above $200,000 is then every dollar above that, they're going to pay an additional 0.9%. All right? And so we pay Medicare taxes. And again, that's going to be based upon our income. Now let's look at the numbers for Social Security. Right now, if you're still working, 12.40% of every dollar you're making is going into Social Security to fund that system. 6.20 is paid by you, and again, your employer matches that 6.20%. Now, there is a limit to this though, so we only have to pay Social Security taxes on income up to $160,200. So if we make any income above $160,200, then that will not be subject to Social Security taxes. All right, so we are funding Medicare, and again, our income is going to determine how much taxes that we're going to be paying. Hey, just real quickly, if you're finding this video to be helpful, you can like, comment, and subscribe. And if you do so, that'll let YouTube know that this is helpful information, and they'll send it out to others who also need to learn about Medicare. Now, in both of these government programs, we're eligible to draw Medicare benefits and Social Security benefits as long as we've been paying in to that tax system these amounts of money here for 40 quarters. 40 quarters. Which is basically 10 years worth of work. And again, the same thing would be true over here. We got 40 quarters, 10 years worth of work is all that's necessary, and then we can draw benefits. Okay, 10 years. And so we can either draw our benefits from our own work record, having paid in our own at least 10 years worth of work, or we can actually draw those from a spouse. That could be someone you're married to. As long as you've been married to them for a year, you can draw benefits from them as long as, of course, they're eligible. If you're not married and you're divorced, then you can actually draw benefits from an ex-spouse. And there's some rules about that I don't want to go into right now, but basically as long as your marriage lasted 10 years or longer and you didn't remarry prior to the age of 60, you can always go back to that ex-spouse. And again, there's some additional rules to that, but the point is we have to have 40 quarters to either draw Social Security or Medicare of our own or from someone else that we're married to now or were married previously, including even a deceased spouse. All right, and so that's the taxes, that's the eligibility. Now, as a general rule, when we talk about taking these benefits, most people start their Medicare at age 65 unless their spouse is still working. You don't have to go on Medicare at 65 unless you or your spouse are not working, or you work for a company that has 19 employees or less, then you have to take Medicare A and B. If you're approaching 65 and you're on a retiree plan, COBRA insurance, or an ACA plan, healthcare exchange plan, then you have to go on Medicare at 65. So most people start at 65 unless they or their spouse are working and there are 20 employees or more. If that's the case, you don't have to go on Medicare at 65. You can go on a later date when you decide to either retire or come off of that employer-provided plan. All right, so that's the age of normal eligibility. Now, when it comes to Social Security, there's a variety of ages. Now, all of us have what is called a full retirement age. Anyone born between 1943 and 1954 has a full retirement age of 66. But beginning in 1955, the government started adding 2 months to everyone's full retirement age. So again, 1943 to 1954, full retirement age, 66. You're born in 1955, your full retirement age will be 66 and 2 months. Born in 1956, they had 4 months. 1957, they had 6 months. 1958, they had 8 months. 1959, they had 10 months. And in 1960, thereafter, we have a full retirement age of 67. All right, so just quick example, if you want to jot this down, let's suppose someone is born today. I'm shooting this video today. It is January the 10th of 2023. And so if someone turns, let's say, 65 today, January 10th of 1958 was their birthday. They would certainly be eligible for Medicare this month, the month of January. Doesn't mean they have to take, if there's a group coverage they have through their employment or their spouse employment, that's 20 or more, they don't have to go on Medicare. But if that's not the case, they're going on Medicare effective their birth month. Now, when it comes to their full retirement age, again, their birthday's today, January 10th, 1958. Their full retirement age is going to be next year in January of 2024. They will turn 66. But again, remember, we have to add 8 months to that. And so when we hit January of 2024, on the 10th, they turn 66. So the way we add 8 months is this. We add February, March, April, May, June, July, August, September. So in that example, in September of 2024, they will have hit their full retirement age. And here's why that matters. Because if we take our Social Security benefits anytime before full retirement age, we are going to have some income limits, some wage limits that will affect our Social Security. So again, if I get to my full retirement age, there's no issue at all with how much income I'm making. I can work and take my full Social Security, and there's no consequence at all to my Social Security check. But if I take before my full retirement age, there's actually 2 issues. Number one, I'm going to take less of a benefit, right? And I'm also going to have what is called an earnings test. An earnings test. Now, as we talk about earnings tests, keep this in mind. That earnings test is only wages, meaning they're going to test your working wages. Earnings test does not include any kind of annuity income, pension income, any kind of like a rental income that you have. You have a rental property. If you're pulling 401k, 403b distributions, none of that goes to the earnings test. So it's only your working wages, not your spouse's, just yours. So if you're still employed, then if we take Social Security before our full retirement age, then we can only make so much money. All right, so that's called the earnings test. So what happens is this. If I start taking as early as 62, I'm going to take less. I'm going to take anywhere from about 25 to 30% less than my full retirement age. But from 62 all the way up until December of the year where I'm still 65, I'm going to be limited in my amount of money I can have. That's called the earnings test. Now this year in 2023, that number is $21,240. That's the most I can make in wages without it having bearing on my Social Security check. So what happens is for every $2 I make above that limit, they take $1 out of my Social Security check. So let's keep it simple. Let's say I make $4,000 above that. So I'm at $25,240. Again, for every 2 above, they take $1 out. So that means I'm $2,000 above that limit. And so it means I'm $4,000 above the limit. So they're going to withhold $2,000 in Social Security benefits before they start giving me my Social Security check. So they front load that, they withhold that. So anytime from 62 up until the year before I turn full retirement age, I'm limited. Then what happens? January of the year I turn full retirement age, and let's go back to my example. Remember we said we hit full retirement age in September of 2024, if my birthday is today. Okay, so that means from January up until right before the month I turn full retirement age, so in my example, we're January to August of 2024, this number, earnings test, goes up drastically. This year, it's $56,520. If I make above the limit, for every $3 I make above, they take $1 out of my check. So the year I turn full retirement age, I can make, almost 3 times the amount of money, and the penalty is going to be less. So they increase that number. But here's what happens. That earnings test, once I hit my full retirement age, this earning test goes away. You can keep working, make as much money as you want. It has no bearing at all on your Social Security. And here's my point. So our income affects our Social Security. Security. Now also keep in mind, if I take early, I'm going to take less, and that's a permanent reduction. So if I take 1 year early, I'm going to lose anywhere from about 6 to 7%. 2 years early, anywhere from about 12 to 14%. So every year I take early, I'm going to take less of a benefit. All right. Now, another issue that relates to taking Social Security when it comes to our income is the calculation that we have to use to determine how much of your Social Security benefits are going to be taxable. And again, that is called provisional income. Provisional income. Now, let me give you the definition of provisional income. And what provisional income is used for is to determine how much of my Social Security benefits will be taxable. All right? And sometimes 0 is taxable. Sometimes 85% is taxable. So let me show you how that works. So we've got to start with the provisional income number. So here's the way that works. We take our gross income. We add to that anything that's what's called tax-exempt interest. Tax-exempt interest. Now, typically, this tax-exempt interest is going to be municipal bonds, sometimes some U.S. savings bonds, income that you earned from a foreign employer. But those things are not taxable income, but they're still reported on your return. So we take tax-exempt interest, that line, plus your gross income, and what we do is to that number, we add 50% of whatever your Social Security benefit is. So if you're getting $2,000 a month, that would be $12,000 in the year, half of that money. So gross income plus tax-exempt interest plus your Social Security. And that number equals your provisional income. Okay, so that number then is put into a certain schedule to determine how much is taxable. And so we have two different schedules. We have a single filer schedule and we have a married filing schedule. So here's the way it works. If this provisional income number is going to be less than, let me say it this way, if that provisional income number is going to be $25,000 or less, 0 of my Social Security is going to be taxable. If it's $25,000 to $34,000, so $34K, then right in here, if I'm between 25 and 34, then that amount that's taxable for Social Security will be 50%. 50% of my Social Security benefits will be taxed as ordinary income. But if I'm above this $34,000, then 85% of my Social Security income will be taxed at ordinary income rates. So that's for those of you that are single filers. Those of you that are married, we have a different chart, and that's this. If married filing jointly, $32,000 or less, again, 0 of your Social Security is taxable. Anything between 32 and 44, 50% is taxable, and anything above 44, 85%. So the most someone would pay as far as taxable income, 85% of their Social Security could be taxed at ordinary rates. All right, and so that's what I'm saying. Your income is going to also affect what kind of taxes you'll be paying on your Social Security. All right, so that's everything as it relates to Social Security. Now, let me draw a line through here to kind of keep these separate, and let's talk about back to Medicare as it relates to your income. Now again, we're eligible for Medicare at 65 as long as we have 40 quarters. Now there are some people that started Medicare younger than that because they were on disability. So anyone that's on disability, once they've been receiving Social Security disability for 24 months, on the 25th month they're automatically enrolled into Medicare A and B. So there are some people that are already on Medicare before 65 because of disability. But the majority of you are eligible for Medicare at 65. And so again, if we're going to start at 65, we call that your initial enrollment period. And so you have to start within a 7-month window, 3 months before you turn 65, month of, and then 3 months after. Now, not everyone has to start at 65. Remember what I said? You or your spouse still working, 20 or more employees at the company. You don't have to do anything with Medicare A or B. Okay, but once you lose that employer plan, you need to come into Medicare, and you'll come in using what is called a special enrollment period. It's a different process, different paperwork. You work with us, we're happy to help you through all this, but my whole point is, as we look at Medicare eligibility, it begins at 65, but we don't have to to take then, we can take at a later date as long as you or your spouse were working. All right, so that's eligibility. Now what I want to do is I want to talk about your income as it relates to what you will be paying for your Medicare. Now, when it comes to Medicare Part A, as long as you have 40 quarters, remember your A is going to be a zero premium. So your income has nothing at all to do with Medicare A. As long as you have 40 quarters or your spouse does, there's zero premium. But when it comes to Medicare B, this is affected by your income. Now, about 90% of the population this year in 2023 is going to be paying for their Part B premium $164.90 a month. Now, if you're on Social Security, that's going to come out of your Social Security check. If you're not, because you're waiting to full retirement age, then what they will do is they will do a couple options. They will let you pay a direct bill. They'll send you a quarterly bill, so it'd be 3 months times that. Or they'll let you do some kind of a bank draft, an ACH, and then you can pay monthly through a bank account, savings, or checking account. And then once you turn on Social Security, they'll change that and they'll start taking out of your check. But the whole point is we have to pay for Medicare Part B. Now, this Part B premium is based upon our income. And again, it's very much like this number here. We call this your modified adjusted gross income. Now, you got to keep this in mind. When they look at your modified adjusted gross income, what's happening is they're taking, again, your adjusted gross income and they modify that by adding back in tax-exempt, tax-free interest income. So again, municipal bonds, sometimes savings bonds, money that you may have earned through a foreign employer where you didn't have to pay federal taxes on, but you have to report that number. So that's that modified adjusted gross income. Also, if I'm starting Medicare in 2023, they're going to look back at my 2021 modified adjusted gross income. So next year, they're going to look back at 2022. They always look 2 years back at that number. So this modified adjusted gross income is what determines how much we're going to pay for our Part B premium. And again, about 7 to 10% of the population is going to pay more than that. All right. And so these additional amounts are called IRMAAs. I'm going to show you a chart here in just a second, but I want you to see the acronym IRMAA. Income-related monthly adjusted amount. So for those people that are high income, then they're going to be paying more for their Part B as well as for their Part D drug plan. Hey, if you're finding this video helpful, I want to invite you to go right up here and actually click on a link that will allow you to watch what I call the Medicare Essentials Workshop. It's a workshop that I did that really is going to show you everything you need to know about Medicare from A to Z, how to enroll, when to enroll, and the plan options for you. So go to that link and check it out. So this is the 2023 IRMAA chart for Medicare Part B premiums as well as drug plans. So our high income will affect what we pay for B and D. All right, so now keep in mind, as we look at this chart, we have two different schedules, and those are going to be individual filers, meaning you file, you're single, you file an individual return, or you're married and you file a joint return. Now, for those of you that may be married and you file separate returns, then this chart is not accurate. In fact, you really do get penalized for being in that situation. And so, again, we're talking about married filing a joint return and then a single person, again, filing an individual return. So let's go back, and you're going to notice here we have 5 different levels of IRMAAs, depending upon, again, that modified adjusted gross income. Right? AGI plus tax-exempt interest equals modified adjusted gross income. On my Medicare 2023, they're looking at 2021 income. So here's what we have. So an individual filer, anywhere between 0 to 97,000 modified adjusted gross income, couple anywhere from 0 to 194,000. If that's your income level, you will not have an IRMAA at all on the B or the D. So we have no IRMAAs at these income levels. And again, that's over 90% of the population. But I want to remind you, your Part B premium, you still have to pay, and that's going to be $164.90 a month. It's going to come out of your check, or they'll bill you for that quarterly or set up a bank draft for you called Medicare Easy Pay. All right? So in this level, we have no IRMAAs. Next level is going to be an individual filer, 97 to 123, couple 194 to 246. Obviously, those are just doubled. And now we have an IRMAA. So not only am I paying that $164.90, but now in this situation, I've got a B IRMAA of $65.90 and a D IRMAA of $12.20. So what am I paying now? I'm paying an additional, because of my high income, I'm paying an additional about $80 a month in my Medicare premiums. Okay, now I'm not going through this whole chart with you, but I want to make sure that you do understand as these income levels go up, 123, 153, 246, 306, what's happening? Our IRMAAs are also going up as well. And so you have to simply find where you fit on that chart. So the most we'd ever have to pay when it comes to IRMAAs would be single above 500, a married couple above 750. Then we're paying $395, so we're paying an extra $470 a month in total, because we've got the B IRMAA at $395.60, and we got this at $76.40. Okay, so let me just very quickly explain to you why this is happening. Every year, Medicare calculates what it costs them to cover the average Medicare recipient. Okay, and right now, there's basically 4 times that amount there, so that would be what, $660 is what Medicare projected it would cost them to cover the average recipient for Medicare Part B, everything on the outpatient side and doctor side, $660. So at income levels of less than $97,000 to less than $194, what's happening? You're actually paying 25% of what it costs the government to cover you. The 75% is coming from the Medicare budget. So at this income level, you pay 25, they pay 75. But as our income goes up, what happens is you're going to pay more. So here's what's going on when we add this IRMAA here and all these different IRMAA levels. At this IRMAA level, remember what I said, it costs the government $660 on average to cover you. So at this income level, what they're doing, here you had no IRMAA, you pay 25, they pay 75. At this income level, you are paying 35 and they're paying 65. At the next income level, you're paying 50% and they pay 50%. Here you're paying 65%. Here you're paying 75%. Here you're paying 85%. So the rationale is because you have this high income, they're saying we're not going to offset your Part B expenses and your Part D expenses as much. You make more money and you're going to pay more of that. So as our income goes up, we're just simply paying more out of our own pocket, and Medicare is paying less to offset these expenses. So that's the whole purpose behind the IRMAA. Now, keep this in mind, and I'll close with this. There are times, remember, we're starting in 2023, they're looking at 2021. Well, what happens if you retired in 2022 or you're going to retire this year and your numbers are going to change? You may be high income, but it's going to shift the other direction. What you can always do if the numbers do change because of a life-changing event, there's 8 possible life-changing event. The main ones we use would be work stoppage, you totally retired, work reduction, death, divorce, or an annulment. In other words, there's 8 possible life-changing events. And so if you've had a life-changing event that has affected now this chart of your numbers, and you're going to make less money because of that retirement or semi-retirement, or because of a death, or you got married and things have changed, then what can happen is you can appeal the IRMAAs. And we use a form called an SA-44, and it's a very simple form to fill out. If you work with us, we're happy to do this for you and with you, but you can appeal the IRMAA if we have a life-changing event. So we can say, I'm starting in 2023, and you're looking at 2021, but I retired in 2022 or 23, so my numbers have changed. So we can give them the new numbers. You can give them your actual for 2022 or project for 2023. And as long as that life-changing event has happened, between one day up to 2 years, then you can use that life-changing event, and they will not look back. They'll look at the new numbers, and they will drop off these IRMAAs if indeed that's what you qualify to do. And again, we're happy to help you walk through that process to eliminate those IRMAAs. And again, I always tell people, if you're paying IRMAAs, even though I'm sure it's disappointing to you, it's still a wonderful problem to have. They are just going to charge you a little bit more for your Medicare B as well as your D. So this is how your income will affect you for 2023 as it relates to Social Security and the Medicare.